If you are a founder of a direct-to-consumer brand who wants to raise money from investors but does not know where to start and how to get investors interested for a first meeting, then this video is for you. Hi, my name is Anya and I'm founder of Venture Muse Club, an online community for DTC founders, and I teach founders on how to grow their brands through content, community, as well as demystify the world of venture capital. So in today's video, I'm talking about how to get your first meeting with investors, and I'm going to cover topics like where to find your investors, how to find a suitable investor, how to get them interested, and how to ultimately secure that first meeting for your brand. So if you're interested to learn about these, then keep on watching. First, let's talk about where to find investors in the first place. And first, let's talk about online, right? Like where you can find an investor online. Obviously, there's platforms like Gust, AngelList, Seed Invest, places like that where you can find a lot of early stage investors, especially looking to invest in seed or pre-seed Series A type stages. And those platforms are great if you're looking to have an early stage fundraising campaign for your brand, maybe crowdfunding, something like that. Another great place to find and connect with potential investors for your brand is platforms like Twitter and LinkedIn. And I feel like LinkedIn is often an overlooked tool because it's sort of sitting in plain sight, but it is the best way to actually reach out to someone who is actively looking to make investments. So this is why I often advise to the founders of the brands that I work with to maintain a strong personal brand on platforms like LinkedIn, because investors very often go on LinkedIn or Twitter to search for potential investments. Now let's move on to the offline settings where you can potentially meet your investor. I recommend looking up your local demo days, any sort of investment events, industry conferences, things like that, because as an active investor who is looking to deploy capital, you would want to be participating in these events and looking out for potential investments. So if you're a founder looking to meet those potential investors, attending industry events is a great way to do so. Don't ignore big industry events as well. So for example, if you're a founder of a beauty brand, color cosmetics, or skincare, going to large events like BeautyCon is also a great way to meet potential investors, because VCs and angel investors will attend those events in search for meeting of founders of very early stage brands. So this is also a very great opportunity. Now let's move on to the next step of securing a potential meeting with an investor. And this is a mistake that I see a lot of founders make who are maybe new to fundraising and haven't fundraised before, and that is not filtering down the potential investors that they approach, let's say to the ones that they found online. And what is very important for every founder to understand is that not every investor is going to be suitable as a potential investor for your particular brand, because each investor has an investment thesis, meaning that you would invest in a particular stage or you would invest in a particular industry. So just because you've met a venture capital fund doesn't necessarily mean that they will be interested in investing in your industry or in your stage. So you as a founder need to do your due diligence on your end in researching every investor that you come across and making sure that they do invest in a stage of the business where you're in and they do invest in the industry where you're in. And the way you can do that is typically investors will have their portfolio, at least some of the companies that they invested in, public on their website. So it's a great way for you to start in that research. So go through the websites of potential investors and see what sort of companies they have invested in the past and whether or not those companies are similar to your brand or are in a similar stage to your brand. And then based on doing this research, you as a founder can create a list of potential target investors that you would reach out to. And approaching a potential investor doesn't have to be complicated at all. I recommend starting in a platform like LinkedIn and finding the potential investor that you are looking to approach on there, and then going through the list of employees and finding the most suitable person to reach out to. In most cases, it's going to be a managing partner or a partner. So don't hesitate to send them a message. A lot of these profiles are going to be premium profiles, so you might not even need to use any in-mail credits to send them a message. And a good investor, a good active investor, is always going to keep an eye out on the incoming messages that they receive on social platforms like Twitter or LinkedIn or even their personal email. So highly likely a message is going to be seen, and if the investor is interested, they're going to respond to you. A few of the tips when sending someone a message as a first reach out message on LinkedIn is to first make sure that the person that you are sending a message to has an active profile, that they have either commented on someone else's post, or they have posted something, or that you can see that this profile is not abandoned profile on LinkedIn. And then second, make sure that the message is personalized. So address them by their first name, and then add a sentence or two that shows that you have done your research and your due diligence on your end, and why would your brand be a great addition to their portfolio. In addition to that, sending your fundraising deck to an info@email or hello@email, whatever is the general email box for the fund that you're reaching out to, is also a great way, because most of the time those emails are closely monitored and your message is going to be seen as well. And as with any sort of reach out campaigns, make sure that you follow up on your messages. And even if you're going to be turned down as an investment, then you can ask what is the reason and what could potentially be improved. And most investors would be open to sharing that feedback with you as well. And now to the last part, and that is, how do you get the potential investor interested in your company and want to set up the first meeting with you? As mentioned before, doing your homework and your own due diligence is key in this process. So when you do reach out to a venture capital fund and an angel investor, you as a founder want to show to them how would your brand or your company add value to their portfolio of already existing investments. So look at the companies that invested in the past, see if your brand is either similar to those companies or could be a complementary brand to those companies, and see how you could potentially work with them. Present any sort of market data that you think would be relevant, saying that your brand is on trend, or you see that this particular niche of the market where your brand is in is set to explode in the next couple of years. And really present your case and how would your exact brand would be a perfect match for that exact investor. And an important thing to keep in mind as a founder is to really put yourself in the shoes of the investor and understand how are they looking at your brand and what are they looking to get out of making investment into your company. So there you have it. There's a simple 4-step process on how to get your first meeting with a potential investor. If you have any more questions, please leave them down in the comments. If you enjoyed this video, please subscribe and like this video. I post weekly content on how to grow your direct-to-consumer brand through content, community, as well as demystifying venture capital. Thanks so much for watching, and I'll see you next week.